Okay, well, some numbers on your screen and Asian Paints numbers are out. You could argue in line with estimates. On that base, it's about a 3.5% miss, which is okay. Net profit at 1111 crores versus an estimate of 1144 crores. So 3% below estimate. To my mind, this qualifies as an inline set of numbers. We'll wait for the other details to be out as well. The internals are important. Have margins behaved? This is the revenue number, 8549. On that front, it's a bit lower, and therefore I would suspect that either there is another income or maybe the margin performance has looked very strong, and we'll try and get an understanding of that as well. But the revenue number may be a tad disappointing, 8549. The stock is seeing a bit of a spike, which is fine, but I would love to know what's gone behind the small revenue miss and what the margins would be doing. Harsh, any luck you have on the other data?
Yeah, so just want to quickly correct that. Net profit was expected at 1448 crore versus the 1144 crore same time last year.
Oh.
So the number seems to be
below
not
estimate.
A tad bit, but quite a bit lower that sense. So of course we'll repair that on screen, but basically it seems like we have missed estimates by quite a bit. We'll wait in for the EBITDA number to come in. Revenue is at 8903 crore, was the expectation. The number has come in at around 8500 crore. So it's led by a miss with regard to revenue, which seemed to have disappointed a bit, it seems. And therefore might start to see the stock behave accordingly. We've seen a bit of a spike at the start, but seems to be cooling off as we speak.
Are you sure about 1448, the estimate?
Yeah, seems like our estimates seem to be building in 1448 crore as the PAT estimate.
Okay, then on that basis, I think it is looking unusually soft. The EBITDA is at 163 on almost all line items though, Harsh. The number, look at that. Margins are actually higher, 19.4 versus estimated 18.3. So, well, let's wait and watch.
So, sir, EBITDA number has come in line with what the estimate was.
Agreed.
Despite the 10% or maybe 5-ish% lower top line number, it seems EBITDA has come in line, and therefore margins which were expected at 18.3 have come in 19 plus.
Agreed. So EBITDA is in line and sales are lower. But if the PAT estimate was 1448, then the PAT is unusually lower, because ideally with the kind of margin expansion that Asian Paints has shown, the PAT number should have been in line with estimates. But well, let's wait and watch. It is certainly below estimates. 1110 versus 1448 crores. Nirav Ashar, initial thoughts here. Margins above, revenue and PAT below estimates. How would you think about this? We're still waiting for the commentary, of course.
Yeah, good afternoon, and thank you for inviting me on your show. I think as far as Asian Paints is concerned, I think the previous quarter, I'm going by what we have seen during the previous quarters, we've seen a change in the product mix because the urban markets have not been doing that well. So the premium, the contribution from the premium products or the higher end paints has been on the lower side. It's declined actually. So I would attribute this to the fall in the revenues, and it is quite possible that the rural markets would have played an important role as far as the revenue contribution is concerned. And there we have the lower range products which generally tend to do well, where the margins are on the lower side. I think waterproofing segments, construction chemicals would have played an important role as far as the sales mix is concerned. And I think to that extent, this would have helped the margin trajectory. And I think the expenses would be on the higher side, the employee-related costs, etc., selling and distribution overheads, which would have put pressure on the bottom line. I think this was a trend which we have seen in the previous quarter. I think there was a decline of something like 40% in the PAT during the previous quarter. I think it should be on something on similar lines also in the current quarter, because the cost pressures have been significantly higher.
Okay, understood. But the lower revenue number, and despite that, being able to maintain EBITDA at what the estimated number was. Of course, there's been a fall, Nirav, but what's the initial sense like with regard to EBITDA? Because yes, margins have contracted and contracted further, but it's come in slightly better than what the street was penciling in.
Well, I think it could be attributed to certain factors. I think one, the crude oil prices have been on the lower side, so I think that would have helped them to a certain extent. During the previous quarter, we had the currency, which was also behaving quite well. So it's quite possible that they've been able to control their manufacturing related overheads. Cost optimization could also have played a part in this. And I think as far as certain categories are concerned, for example, waterproofing, etc., there is no additional expense which the company has to incur on selling and distribution side. So I think that could have also helped, because this is a natural product which tends to promote itself in a natural way. So I think these are two categories, construction chemicals and waterproofing, where you incur lower amount of selling and distribution overheads, but at the same time you reap better quality margins.
Most certainly. Well, this is, well, so just to get this clarity, versus an estimate of 1144, they have come in at 1111, which is, to my mind, in line with estimates. Margins are better. Mahima joins in to very quickly tell us why have these numbers happened. Mahima, good margin number despite a top line softness for Asian Paints.
Absolutely. So margin numbers are better as what they were expected. They were expected around 18%, but they've come at 19%, which is why we are seeing the spike in the stock. In terms of the EBITDA, it's down around 20% and net overall revenue is up around 6%. But a couple of things to note, they've mentioned that volume growth has been hurt despite the kind of festive season uptick. In terms of the slowdown, they've said that overall the industrial business grew by 3.8% on the back of general industrial and refinish segments. Volume growth are impacted by the weak festive season demand is what they've said, and margins are down due to inferior product mix and increased sales and distribution expenses. So for them, because competitive intensity is going up, they are increasing their overall sales and distribution and advertisement expense, which is why their margins are kind of getting hurt as compared to YOY, but their margins are better than what were expected. In terms of the revenues of international business, they've grown by around 5%. Home and decor business has benefited this quarter, and this is on the progress of their network expansion strategy. So overall, with respect to that, Asian Paints has done fairly well. In terms of the estimates, revenue has however missed the estimates, but in terms of margins, it's a beat in terms of as compared to the estimates. So this is the overall view. Of course, we'll have to wait for the investor presentation and the investor con call to get more details from the management with respect to how competition is hurting them, and also with respect to the management changes that have taken place. But so far, this is what we have on Asian Paints.